Good morning, everybody. It is Monday, November 7th. Daylight savings time always messes with me for a few weeks, so bear with me since the market's now open 10:30 at night and close at 5 o'clock in the morning. So I will do everything I can do to stay on through the closing bell, but yeah, it takes a little while, and I'm not 40 anymore, so anyway, Monday morning, good morning. Quick video. I'm going to try and do these every day if I can. Uh, Big picture, man. SPX credit spreads. If you're in it, you're loving it. If you're not in it, I behoove you. Get into this, man. Get into this. I started enforcing this back on September 29th using the system that I had been testing and trading with. And I just finally decided, you know what? Enough wasting money for everybody. Let's do this. One day, October 14th, I was cocky. I was on a big win streak. I took a trade that was on the short side after already having the win on the upside, and I got run over. I was cocky. On Friday, over a week ago, October 28th, after we had the ECB, the GDP number, Apple reported on that Friday, you remember a week ago, the markets just ran wild. The trade did not work. We had 38.80 for the upside. We knew where that bear market line was at 38.55. We were playing it. It was inside. But even if we went outside, which some people did later in the day, that 38.80 got broken and it got run over. That is a true failure. One failure out of all of that, other than my being cocky back on October 14th. Friday, the upside trade, early morning, 38.30, 38.25, took you in at least 20%. The downside trade, that we don't close red 5 days in a row, Monday through Friday, that downside trade traded in the morning, went workless. Traded again in the afternoon when it was full credit. After we dipped down below that 37.15 level, you got 300% on that trade from 2 o'clock into the end of the day. So again, I behoove you get into this. 37.90 roughly is what it looks like right now with the gap up that we have after gapping down on that Apple news at 6 o'clock in the morning, that we are looking somewhere around 38.65 for the upside, 37.15 for the downside. Nice to see that 37.15 show up inside the calculation. So anyway, going to go real quick with this because I've got something to share. SPX, okay, what I'm tracking right now is a 1, 2, 3. And now this being the 4, the dip that we had, which is a 50 retracement down to the lows, we're looking for a 5 somewhere up here around the 200-day moving average, around that Russian invasion low back in February, 41.15, as we go into Thanksgiving, Christmas period is the window that I'm looking. So what I'm looking at into Thanksgiving Christmas period is for this to be the wave 5. I'm looking at this from a very closed in point of view, up here to around this area, which again, it's just what I'm looking at right now from a shorter time frame kind of view. I can go a lot bigger, and I can show you why, and this is what I want to share with you. The VIX, we've been commenting on the VIX, the VIX, the VIX. It's been the very number one thing on every email. And we're starting to realize that the VIX is broken. And there's guys that I look up to that are also saying the same thing. They're questioning what is going on with the VIX. I got the opportunity to listen in on a discussion on Friday as well. So I had an opportunity to listen in on a conversation on Friday, and it opened up a pretty good idea. All right. This is the VIX, right? And we see the VIX is down here right around that 2371 pivot, all below the 50, the 200, the 100, and I've been questioning, about caution, the VIX looks broken, the VIX looks broken. Well, here's the VXN. This is the VIX for the NASDAQ. And look at these ghost wicks that we're getting down here. We're getting a ghost wick down here at 9.94. And you don't always get to see these ghost wicks, but when you do, they're kind of like algorithm hints that are kind of telling you stuff, because you used to get them and then they would disappear. But these are all staying here. Now, this is the VIX for the NASDAQ. And again, I've been talking about how the NASDAQ is completely blown out. It's your legs, it's what you run with. I don't know what the news is. I don't know. But going back to the VIX, what was suggested in the conversation I was listening in on makes a lot of sense. And here's where the points are. There aren't any large institutions or large traders buying puts anymore, because they already bought their coverage. They already hedged. All right. People don't trade and buy puts so that they can make money on them most of the time. People buy puts to hedge against their investment because they're long the stock. The reason for this drop on the VIX, this is the theory from the conversation, and it makes a lot of sense to me, is that people that are long are selling calls against their positions, and that's the reason why the VIX is dropping. Now, taking that into consideration, all right, you go over here onto the SPX and you start to question, how do we get up higher? And the way that we get up higher, using that conversation that I was privy to be listening to, because people have been selling calls against their shares, it's going to be a short squeeze on the bullish side, where they have to cover their calls. And in order to cover their calls, that means they need to buy more stock, because it's the NASDAQ, the major weighted tech stocks that we are theoretically talking about. There's your short squeeze, there's your shove, and that is the very plausible possibility on how we get up into that plus 4,000, lower 4,100 range as we head into Christmas. For I'm only looking at this as being an ABC type of trade right now. It very well could be a much larger wave looking to go up there to that 4,300. We could even possibly be looking up there at around 4,500. I'm not going to go there yet. A lot of stuff has to be proven. Let's start seeing some closes above that 38.55 bear level market before we start getting into anything like that. So I have the email out for you in a few minutes. Welcome to the week.